What's that? Okay.
Karuna, can we start?
Sure, ma'am. Thank you.
You're making the announcement, is it?
Ma'am, the announcement is done.
Okay, so I'll start straight
Sure,
away?
thank you.
Okay, thanks. So we go straight to questions, or you would?
I'll make a short statement.
Sure.
Good morning. Let me emphasize some aspects of our statement and add a little more. Inflation has evolved closely along the trajectory set by the monetary policy stance, with unfavorable base effects on the ebb and benign prices of fruits and vegetables and crude oil. The January 2016 target of 6% should be met. Going forward, under the assumption of a normal monsoon and the current level of crude oil prices and exchange rates, inflation is likely to be inertial and around 5% by the end of fiscal 2016-17. However, the implementation of the 7th Central Pay Commission award has not been factored into these projections and will impart upward momentum to this trajectory for a period of 1 to 2 years. There are certain aspects of this Pay Commission award that we can look through, however. The Reserve Bank will adjust the forecast path as and when more clarity emerges on the timing of implementation. Turning to the policy stance, the Indian economy is currently being viewed as a beacon of stability because of the steady disinflation, a modest current account deficit, and commitment to fiscal rectitude. This needs to be maintained so that the foundations of stable and sustainable growth are strengthened. The Reserve Bank continues to be accommodative, even as it leaves the policy rate unchanged in this review, while awaiting further data on the development of inflation. Structural reforms in the forthcoming union budget that boost growth while controlling spending will create more room for monetary policy to support growth, while also ensuring that inflation remains on the projected path of 5% by the end of 2016-17. Now, turning to other matters, in keeping with the government's Startup India initiative, the Reserve Bank will take steps to ease doing business and contribute to an ecosystem that is conducive to the growth of startups. These measures, which we'll announce shortly, will create an enabling framework for startups receiving foreign venture capital, will also allow differing contractual structures embedded in investment instruments, allow differing receipt of consideration for transfer of ownership, create facilities for escrow arrangements, and simplify documentation and reporting procedures, some of which are already in place. A detailed statement is being issued separately and should be available very shortly on the website. Now, over the last few quarters, the Reserve Bank has expanded the tools banks have to deal with stressed loans. We are now working with the government and banks to ensure that the stressed assets are recognized on a proactive basis and that bank balance sheets both reflect a true and fair picture and are adequately provisioned. It's important to note that provisioning prepares banks for possible loan loss, but if the loss does not materialize, it can be written back to profits. We've mapped out various possible scenarios to determine the extent of likely stress and believe they're all manageable. The Finance Minister has indicated he will support the public sector banks with capital infusion as needed. Our estimate is that the support that has been indicated will suffice, especially when coupled with other capital sources that are usually available to banks. Our various scenarios also show that private sector banks will not want for regulatory capital as a result of this exercise. Finally, the RBI is also working on identifying currently non-recognizable capital that is already on bank balance sheets, such as undervalued assets. The RBI could allow some of these to count as capital as per Basel norms, provided a bank meets minimum common equity standards. We're also monitoring the recovery process to make it more effective. Following consultations with banks and NBFCs, We will shortly issue instructions further fine-tuning the JLF and SDR process. Finally, we monitor the liquidity needs of the economy on a continuing basis. We will use the entire gamut of liquidity instruments, including overnight and term repos, as well as open market operations, to ensure that liquidity is plentifully supplied and the weighted average call money rates hug the policy rate. With that, happy to take questions.
We open it up for questions. Sir.
Lata from
Yeah.
CNBC TV18. Governor, is it fair to say that you have become slightly more skeptical about the inflation level going to 4.8%, a number which was there in the monetary policy report in September? You also point out that services inflation is not falling. And again, that average for Jan-March 2017 has been placed around 5% in contrast to that 4.8 number. And this also doesn't include 7th Pay Commission. So would you say that's something that you're not confident that inflation will fall as much as you were perhaps a few months before? And then a couple of questions on liquidity.
I wouldn't read a lot into the 0.2 difference that you seem to be reading. The wide bands of errors in forecasts. However, since September, of course, we've had some information on the Pay Commission awards, and we have to see how it is implemented and who implements it, including the center and the state and the timing. There are some aspects of the Pay Commission that we can look through, some we cannot. And over time, as the award is actually put in place, we will see and be able to give you more information on that. So broadly, I don't think it's fair to read that we have become more hawkish over time. I think, broadly speaking, the positives are balanced by the negatives. That there has been some movement downward in oil prices, but at the same time, what we have to look for, there are some risks which could also pull inflation down, such as a good monsoon next year. Of course, I think there's a lot of speculation on whether after two bad monsoons you're almost sure to get a good monsoon. I leave that to the meteorologists to figure out. But nevertheless, there are some downside risks as well as upside risks.
No, I didn't mean more hawkish. I was just wondering, not as dovish as you were.
Well,
Governor, you've put a lot of emphasis on the fiscal deficit number. Exactly what would you want to hear that will give you this monetary space that you are looking for? And one sentence remarkable by its absence is you've not spoken about public investment pulling in private investment. So clearly you're not looking for that as
no, I don't think we
budget.
have to reiterate every aspect of our previous statement in the continuing statement. So it's not to say that public investment is not important. I think it is important and the government is engaged in it. On the issue of the fiscal deficit and the budget and so on, it's not our place to tell the government what to do, but we'll see what the government does and then react accordingly.
Nisha?
Was looking at the statement, and you've clearly put the ball in now Finance Minister Arun Jaitley's court at this point. How important is another monetary policy cut at this point? And there is an expectation building up in the market that it could be announced right after the budget, even before the next policy review. So how important is this, and especially at a time when liquidity constraint is so high in the marketplace? Do you think that it is grave and OMOs are sufficient at this point? Because clearly, no matter how many cuts you do, the transmission is going to be very, very critical and will be restrained if liquidity remains at these levels.
Right. A couple of things. One, as far as future policy moves, I will not comment on it now. We will see. I mean, the statement is pretty clear on what we are looking for, the kind of data we're looking for, which will inform our future policy moves. On the issue of liquidity, I mean, our measure of whether there's enough liquidity, of course, is to see whether the rates in the call money markets are broadly in line with the policy rate, and I think the evidence is they are. Now, certainly because of a variety of aspects which we've pointed out in the statement, the amount of lending we're doing in the markets through facilities has increased to offset some of the shortages for a variety of reasons. But we are supplying that liquidity to the market. So to argue there's an enormous liquidity shortage at this point, I think is not consistent with the facts. However, we also take a view on the difference between short-term liquidity needs because of seasonal build-ups of, say, of government balances, and long-term liquidity needs which come from a need to expand the RBI's balance sheet at a steady pace. And we're looking into what those mean for what instruments we use. Whereas short-term liquidity needs, we use more the short-term instruments. Whereas long-term liquidity needs, we use open market operations, currency reserve management, and so on. So as I said in the sort of pre-statement to this conference, we will look at the emerging liquidity needs and use all instruments to manage those.
And on the NPA concern, it's a burning issue right now, Dr. Rajan, and of course we've seen some of the bottom lines of private banks who've come out with earnings really being hit. Has RBI given a list to the banks to recognize some of the accounts as NPA, or is it only high provisioning that we are looking at? And this is a specific question because once it becomes an NPA, the valuation of the company also drops and makes it unsellable as well. So that's one of the important things I wanted to understand, especially when you also said that there could be some fine-tuning of GLF as well as SDR. Does this mean that some of the SDR norms would also be changed going forward?
No. Let me ask Mr. Mundra to comment on the details very shortly. But the RBI has not told banks what to do. We have discussed with them a range of accounts and essentially given them some time to figure out whether those accounts are regularized or moved into different categorizations. It's now in the bank's court to move forward on this. Our only role is to make sure this process is uniform across banks and essentially ensures that over a period of time, bank balance sheets are both fully provisioned as well as the assets that could go bad are recognized as such and classified as such. Now, Mr. Mundra, would you like to add anything to that?
As just mentioned by the governor, there is nothing like handing over a list to the banks. What we did, and we have explained earlier also, that this time we have done the looking at the bank's book across the industry at one point of time, and certain broad observations which came out of such inspection, they were discussed with the bank, they were shared with the bank. In the process, banks were encouraged to have a proactive and conservative approach. Now, what does it translate? You mentioned about whether it is only NPA or whether it is provisioning. I think these two things go together. What it means to explain further, if there is a case which is clearly NPA, it would be NPA, it would entail provisioning. There is no confusion about it. But when you look across the industry, and there are instances where certain weaknesses are observed in the account, which may not be with a particular bank as per the rule-based regime in which we live today. But when we discuss and when banks take a proactive approach, then they start providing for those cases also, which may not necessarily be NPA today, but it prepares them for a future possibility, as mentioned in the policy statement also, and it strengthens their balance sheet. And of course, this also triggers a process whereby the rectification can happen. And if rectification happens, then provision comes back. So broadly, this had been the approach. On your SDR thing, I think Mr. Gandhi would like to mention.
Yeah, we have been having discussion with the banks and other institutions, taking feedback about the SDR provisions and JLF provisions. The JLF operations is set on practical difficulties they have brought forth to us, so that we are working on, and shortly we may give the revised guidelines, tweaking a bit here and there.
Please, one.
Just to clarify, so there's no confusion. When Mr. Gandhi said provisions, it didn't mean provisioning. It meant the aspects of the GLF as well as the SDR.
One request, which is a repeat. Please restrict your questions to one per person in deference to your own colleagues. Govardhan.
Govardhan from the Economic Times. So you mentioned about that you're open to have a plentiful liquidity, and at the same time you are that the overnight call rates are hugging the policy rates. But if you look at the GSEC yields, despite your 125 basis points cut in the last 1 year, they are almost the same as they were. So how do we explain this kind of contrary behavior in the market, or is it the fault of the market? Is it, so where is the fault lie?
No, you must remember GSEC yields are a confluence of a variety of factors. First, depends on when you start tracking the GSEC yields. Remember, policy, on the date we announce a cut, policy is anticipated before that. So if you look from the middle of 2014, for example, GSEC yields have come down significantly since then. So how much of the policy cuts in 2015 were anticipated and how much were not, that does matter. And if there was some anticipation, it was factored into the falling GSEC yields. But GSEC yields are not just about policy. Obviously, expectations of inflation do come in, and I believe expectations have fallen over time. But other aspects also have an influence. For instance, clearly the supply-demand for GSECs at a particular point in time does have some effect. So to that extent, yes, issues of liquidity, issues of available purchasing institutions, etc., do matter.
So one thing on that is, so you also mentioned about the re-emergence of stalled projects. So in the past we have been believing that this government has been clear. When you say that there is a re-emergence of stalled projects, what do you mean? Is it a kind of a re-emergence?
No, if you look at the data, for example, the CMIE data, though there are other sources of data on stalled projects, it looked like it was coming down steadily. And what has happened in the last couple of quarters, Dr. Patel, it seems to have started picking up once again. And that's a source of concern because the steady improvement that was seen seems to be, at least for a while, halted. Now, the government is taking measures to again reduce the stalled projects. Prime Minister, Finance Minister, Minister of State and Finance, all of them are engaged. So hopefully we will see this come down once again.
Amol?
हाय सर, अमोल फ्रॉम जी बिजनेस। मेरा सवाल एनपीए से जुड़ा हुआ है। हालांकि आपने बैड लोन क्लियर करने के लिए एक टारगेट बनाया हुआ है। दावोस में भी आपने एक बहुत ही स्ट्रॉन्ग स्टेटमेंट दिया हुआ था कि बहुत सारे जो प्रोमोटर है वो सिस्टम से पैसा लिए लेकिन वो पार्टीज़ वगैरह कर रहे हैं। सर, हमारी रिसर्च के मुताबिक जो कॉर्पोरेट लोन्स है उसके अलावा होम लोन में भी काफ़ी बड़े पैमाने पे घोस्ट बाइंग हो रही है। बिल्डर ऐसे लोगों को पैसा दे रहे हैं या ऐसे लोगों के ज़रिए बैंक से लोन ज़्यादा ले रहे हैं एंड सिस्टम को पे नहीं कर पा रहे हैं। सो क्या आपको लगता है कि होम लोन में जिस तरह से घोस्ट बाइंग हो रही है, आरबीआई को उसमें कुछ इनिशिएटिव लेना चाहिए या बैंक के लिए बड़ा फॉल हो सकता है आगे चल के? वो
इस सवाल के लिए मुंद्रा साहब जवाब देंगे।
देखिए, जहाँ तक जो इंफॉर्मेशन और डाटा जो बैंक के पास अवेलेबल है अभी तक, जो बैंक का रिटेल पोर्टफोलियो है, पूरा रिटेल पोर्टफोलियो और ख़ास तौर से उसमें जो होम लोन पोर्टफोलियो है, उसमें जो वर्तमान पे जो एनपीए का प्रतिशत है या जो स्ट्रेस लोन का प्रतिशत है वो सबसे कम है। तो जो डाटा अवेलेबल है उसको देखते हुए इस पोर्टफोलियो में कोई अतिरिक्त स्ट्रेस हो ऐसा प्रतीत नहीं होता। लेकिन जो आपने बात कही है वो हमारी भी नज़र में रहती है और इस तरह की जो कोई अगर स्कीम्स हैं या इस तरह कोई नज़र में आती हैं तो उनका बाकायदा इन्वेस्टिगेशन किया जाता है। यहाँ थोड़ा ये भी ध्यान रखना होगा कि जो हाउसिंग लोन सेक्टर है उसको जो NHV है वो हाउसिंग लोन सेक्टर के लिए जो ओवरऑल रेगुलेशन है वो NHP होता है, लेकिन बैंक के पोर्टफोलियो में अगर इस तरह के लोन है और अगर उसमें इस तरह की कोई जो अगर हमें गतिविधि दिखती है तो उस पर हम नज़र रखे हुए रखते हैं। कैन यू
बाय एनी चांस कोई शिकायत, कोई कंप्लेंट आपको इन मामलों को लेके मिली है या कोई ऐसा?
देखिए, एक या दो कोई कंप्लेंट आए वो एक अलग बात होती है, और एक कंप्लेंट की दिशा दिख रही हो कि इस तरह की बहुत सारी कंप्लेंट आ रही हैं या इस तरह की पूरी कोई गतिविधि पूरी इकोनॉमी में दिख रही हो, तो ऐसी कोई दिशा नहीं है, यह मैं कह सकता हूँ। हाँ, इक्का दुक्का कंप्लेंट्स, इंडिविजुअल केसेस होते हैं, वो आते रहते हैं और हम उन पर बाकायदा कार्रवाई करते हैं।
मिस्टर होता।
I'm Hota from Nikkei. I would like to ask you about the recent monetary policy by Bank of Japan. It introduced country's first negative interest rate policy 4 days back. Similarly, ECB has negative interest rate already. There's some criticism that they are undertaking excessive monetary easing measures. So I would like to hear your opinion about this condition.
See, I don't comment on the policies of specific central banks. I think my views on monetary policy across the world have been made pretty clear. I believe there's only so much monetary policy can do, and beyond that, action should be left to others. But this is a view that can be subject to discussion and debate.
Some from that side, Aparna.
Governor Aparna from the Mint newspaper. You recently in your lecture quoted James Carville saying that the best thing is to be the bond market because you can intimidate everyone. So how intimidated are you by the bond market? I'm asking this in the context of transmission, not long-term yields, but even treasury bill yields, and recently even RBI had to cancel all the bids at one of those auctions. So how effective has been the transmission, or is it gone back to where the previous?
No, I look, one of the factors that I didn't mention earlier when we were talking about yields picking up also is that across the world, with tightening policy in mind, yields have been picking up. If you look at some of our emerging market sort of cousins, you find countries where yields have moved considerably more than in India. So, our problem is it hasn't come down as much as we would like, but it hasn't moved up significantly. So, the answer to your question is it's a risk we should be aware of, and often the role of somebody who tries to manage market stability is to warn about risks. Doesn't mean the risk will be realized, and hopefully we will take enough actions that the risk becomes a remote possibility. But it's a warning rather than saying that this is imminent on us.
Anup.
Sir, this is Anup Roy from Business Standard. Government's surplus cash balance with you, meant for auction, though we don't know the actual cash balance, it is 1.5 trillion rupees. So what kind of problem it is creating for you, one, and your own liquidity injection is close to 1.73% of NDTL, whereas your own effort is to put in 1% of NDTL. So what kind of problem it is creating for you as far as monetary policy is concerned and transmission is concerned, etc.?
I wouldn't say that there is an immediate effect, because we do tend to offset any increase in government balances through liquidity measures in the market. So in that sense, short-term fluctuations we expect, and we take measures to offset them. So auctioning government balance is one of them, but we also lend money into the markets at such times. We do also think about what the long-term liquidity needs of the economy are, and obviously, as I said earlier, we will adjust appropriately.
I think we need to look at the issue of liquidity and reserve money growth from the perspective of the nominal growth for the whole year. And at the moment, our reserve money nominal growth is over 12%, which is larger than 10.5% of last year, in a year when we expect nominal growth for the economy to be actually lower. So I think there is adequate base money creation, and it is important to distinguish between offsetting temporary fluctuations and imparting enough long-term expansion of the RBI balance sheet. And there is almost a one-to-one offset between any short-term fluctuations of government cash balances and what we do. And the sufficient statistic to look at that is how close we are on a weighted average call rate basis to the policy rate. And that number has actually been coming down over the last 3 quarters, the deviation from the policy rate. So I think the liquidity management has been adequate, and we stand ready to do more. In fact, that is likely to happen as we reach nearer the end of the fiscal year, and there is some window dressing by banks, etc. So as we did last year. Okay.
Bijoy.
So this is Bijoy from Cogensis. So you're facing some opposition from the banking sector on the March 2017 cleanup deadline. Will this hamper transmission by the banking sector, because there's no mention of the banking sector transmission at all today? And even on the MCLR norms, do you think that you've kind of given them a hall pass with the internal yield curve that you've asked them to do instead of the earlier, base rate linked lending rate that you had initially suggested?
No, I believe that the marginal cost loan pricing, which will kick in April 1st, will actually help transmission. And I think it will be an improvement over the earlier base rate. As you know, banks will move to that for new loans. And I do believe that we will see a significant change in the transmission process when that comes in. So I have no doubts on that account. On the earlier part of the question, banks, I think a number of banks actually welcome the ability to clean up their balance sheets, knowing that others are doing that also, and they will not be seen in isolation. I believe this process will create the basis for strong growth, as banks can then focus not on managing legacy assets, but on lending to new ones. So I don't think that this will deter from profitability in the medium term as well as growth. I think transmission basically will happen. And as I've said continuously, eventually banks will be forced by competition to transmit.
Yes, please.
Sir, I'm Bhavik Nair from the Financial Express. In the revised ECB guidelines, infrastructure firms have been placed in this track 2 when you recently introduced 3 tracks. Now, some firms have been known to have written to the RBI that regarding some clarification, because in track 2 you cannot issue bonds with a tenure less than 10 years. So if that's the case, the spread on all those bonds is likely to go up. What is the clarity that the RBI might come up in this regard?
We have just issued 2 months back this policy, so we'll allow some time for it to run before we take a large-scale review. But on this specific issue of maturity, door-to-door maturity or average maturity, we have received some representations. We are looking at it.
We'll go out and check if there are questions on the bridge. Karuna?
Thank you. Participants on the audio bridge, if you'd like to ask a question, please press star and 1 at this time. Anyone who
No?
has a question, please press star and 1.
Okay.
We have first question from the line of Radhika Mervin from Hindu Business Line. Please go ahead.
Can't hear, Karuna.
Identify non-recognized capital, basically in the form of undervalued assets. If you can explain that a bit. And other, I want to SDR method, it's evident that banks will have to kind of stretch, the duration on the loan side and reduce on the liability. Are we looking at options like floating rate deposits that can come in the future?
On first question, or let me take the second question first. Marginal cost pricing, yes, it will impel banks over time to look at floating rate deposits and other new instruments, but this is not something that we will push them to. They have the freedom to do it even today. What's the first question? I'm sorry. On the issue of non-recognizable capital today, on a number of dimensions, we have been stricter than Basel norms on recognizing assets that have increased in value or assets that exist on the balance sheet that will be a source of value in the future. We are looking at some of these to see if there's a possibility that while still remaining conservative, we can allow banks a little more room to use these. And as we do the analysis, we will make appropriate public statements.
So are these assets which are, what kind of assets are we referring to here?
For example, you may have real estate assets that are counted as a fraction of their, that we allow only a fraction of that value to count as capital. So things like that.
Thank you. Next question is from the line of Sunita Nati from New Indian Express. Please go ahead. Sunita, your line is unmuted. You may go ahead with your question.
Go to the next.
As there is no response, we'll move on to the next question. That's from the line of Manju from DNA. Please go ahead.
I wanted to know why the bank books review was undertaken. What was the signal that RBI was acting on, because most banks had begun reporting lower NPAs for the last few quarters. After the review, what percentage of bank loans are weak or stressed? Private agencies put something like 17 to 18%. So is that something that your review also threw up?
On the first question, which is what was the trigger, there was no specific trigger. What we had focused on in the process of cleaning up bank balance sheets is first to give the banks various powers to deal with stressed assets. There's no point pushing on cleanup when powers are limited. Over the last year and a half, 2 years, we have given them more powers, and we've enabled that. And now the time has come to actually push more on the full recognition and provisioning. So it's a process rather than any trigger. Again, I've forgotten the second question.
What percentage of loans were stressed?
I think those 17-18% numbers may be a little on the high side. But broadly speaking, I think we should also be careful about treating any stressed asset as a write-off, a total write-off. Some of these assets need changes in terms, changes in conditions, sometimes changes in promoters, and could very well, over time, as the economy recovers, repay a fair amount of value.
Will all SDR and JLF accounts invite a provisioning? Is that what you're telling the banks?
Provisioning will be based on whether it is classified as NPA or not. So based on the actual classification of NPA, it will be done. And beyond that, floating provisions banks do make to take care of possible future losses.
Back to this room. Last two questions, Pradeep and Shraddha.
प्रदीप पंड्या, CNBC आवाज़ और CNBC बाजार से। आपने कहा कि बजट आप सरकार पे छोड़ते हैं, लेकिन आपके स्टेटमेंट में अभी भी आपने कहा कि आप स्ट्रक्चरल रिफॉर्म्स देख रहे हैं। इससे आपका क्या मतलब है? किस तरह के स्ट्रक्चरल रिफॉर्म्स?
See, government has suggested a number of steps to to make the economy more flexible, create growth opportunities. There are some steps to incentivize investment. All those will be things that we will look at. There could be steps to encourage more training, skilling. One of the biggest sources of concerns in the economy today is service sector inflation, because there is limited capacity there. You see education, you see healthcare. So whether the government takes some steps in those directions, all those are structural reforms that could help in the particular area we're interested in, which is lowering the pace of inflation over time.
Shanta.
So Shraddha from Bloomberg TV, only because we are very close to the union budget, so again want to ask something on that. So any deviation from the FRBM targets or any reset of the fiscal roadmap, how do you really think that will impact the economy, the debt market, and obviously the monetary policy, of course, if we see any fiscal relaxation?
See, look, the budget has to be viewed as a package always. What are the various aspects of the budget? How does it get put together? So it's very hard to say this number. Well, this number depends on what number was the previous year, what the number will be in the year afterwards. So I don't think anybody, including the markets, is looking at one number. They're looking at the entire package.
Would you take two more, sir? There are
Two more? Okay.
Beena.
Hello, Governor. Beena from Hindustan Times. I just want to know that, you mentioned that you've discussed a range of accounts. So just, is there a possibility that you can share the top 10 borrowers? What kind of, not the names, what I mean is the quantum or the share of accounts, amount, that has been towards the bank, the exposure towards the bank.
I don't think it's I don't think I'd shed more information. I mean, you all have a sense of which are the stressed accounts in the system. So I probably won't add more information than what you already have. But broadly, the banks are aware of some of these issues. The big point was to get them all on the same playing field, to make them collectively aware that these are a variety of accounts, a variety of situations that we are tracking. And it was a good discussion with them, and they're moving forward based on that.
And one more thing, is there a discussion in terms of selling of assets to ARCs? Has there been any progress?
Well, we've had a discussion with the ARCs, with some other NBFCs, on what role they could play in this process. We never tell the banks they must sell thus and such asset, but we need to create capacity in the system to absorb asset sales if they happen. And that's what we are actively engaged in. The ARCs mentioned some impediments in their access to capital. We are looking at that and working with the government to see if their capacity can be expanded.
Ushang has a question on startups.
हेलो थैंक यू मैम थैंक यू सर सर जो स्टार्टअप्स के बारे में बात की जा रही है इन द पॉलिसी डॉक्यूमेंट ऑल्सो आपने मेंशन किया है कि यू वांट टू मेक द होल प्रोसेस मोर ईजियर सो वो कैसे किया जाएगा कैन यू थ्रो सम लाइट ऑन दैट एडिशनली एक कंसर्न जो मार्केट्स में दिखाई पड़ रहा है इज रिगार्डिंग द फंडिंग जो फंडिंग रिलेटेड काफ़ी इशूज़ दिखाई पड़ रहे हैं फॉर द स्टार्टअप्स सो इसे कैसे केटर किया जाएगा इसके ऊपर भी आप कुछ बता सकते हैं
हम प्रोसेस को सिंप्लीफाई करना चाहते हैं. If a startup wants money, it can take it in different forms, complicated contracts. तो कई बार वो contracts FEMA में allowed नहीं है. Can we make it possible for those contracts to actually be undertaken? कई बार जब वो बेचते हैं कंपनी को, all the receipts don't come immediately. There's some time taken before the receipts are paid. During that time, the amount is escrowed. Can we extend the time that the amount is escrowed so that sales can take place more easily? So there are a variety of places where entrepreneurs have come to us and told us that they want some relaxations. The details are in a document which is on the web, Startup Initiatives, Regulatory Relaxations Announced by the Reserve Bank of India. Some have already been announced, some are underway, some are being discussed with the government. But the broad point is we're sort of supporting the startup process by making it easier to raise money, often from abroad, but also simplify the compliance with regulations, including putting a lot of the forms online so that they really don't have to go from pillar to post.
Very last question from Shan.
Governor, a couple of banks, large banks that have announced their results, have said that a chunk of their bad loans in this quarter were from the discussions, rather the list, whichever they had with RBI. So I just wanted to know, why did it take them a nudge from RBI to classify those accounts as NPA? Was it not being, were there instances of IRAC norms not being followed, or how did you arrive at those accounts for that matter?
I think what we did was looked closely at our IRAC norms and had a discussion with the banks on how those norms would continue to be met going forward. So really this is, I think the word proactive is the best way to describe it. These are accounts that for a variety of reasons, based on a reading of the IRAC norms, would look weak and would require sort of classification if you look forward. IRAC is supposed to be essentially forward-looking and becomes effectively forward-looking when you go to the new IFRS norms, which is not that far away. 1819 is IFRS norms. So this is in a way a smooth transition to that process.
So that's all from our side. Thank you very much for joining. Thanks, Karuna.
Thank you very much, ladies and gentlemen.